Yeah. Okay, got it.
And we are live.
Okay. Do we probably wait a couple of minutes to get everybody accessing it and coming on. I should say first off, good morning, everybody. Welcome to STS's monthly webinar. Slight change of day to accommodate our today's speaker. We're very grateful to having Jonathan Waters, the Deputy Chief Executive of the Regulator of Social Housing, joining us again here. I'll be really looking forward to hearing from him and posing some questions after. So as always, we try to kind of keep this a little bit more open, a bit more relaxed. If there is anyone who is attending today's session where has got a burning question, please write that question to us. Well, I've got a couple of people who can monitor it as well, and we can then hopefully pose that question for Jonathan. So also have today, hi John, I should apologise. Before our practice, I just cut John off and he's been struggling to get back on. I do apologise. I pressed the wrong button, John. Human in technology for me. I have Jonathan Waters, and we'll say Sean Stafford and John Stevens joining here today. So I'll let them introduce themselves. Let's go with John first, and then we'll get into it.
John. Good morning. Yeah, I'm a consultant working with STS and have spent my professional life delivering affordable homes with housing associations and local authorities. So I continue that role supporting STS customers and get to see behind the curtain with lots of customers. So that's very interesting.
Good, thank you, John, and you do it very well. Sean.
Morning, everybody. Thank you, Andrew, and thanks to STS for the invitation to participate today, and nice to see you, Jonathan. So I'm Sean Stafford from Saffer Cooper. We're based up in Manchester. We have a long track record of working in the affordable housing sector, and we're very fortunate in that two of our primary client groups are at either end of the development extreme. So one of our clients delivers and has done for a decade now 3.5 new homes every working day. So that's a huge, enormous scale at one end. And we also act as program managers for the other end of the scale, which are almshouses. And lots of people on the call may be familiar with almshouses. There's 35,000 almshouses in the country, but they're managed by 1,800 small charities. And therefore, we lend a hand in terms of guiding them through the development processes if they're adding new homes or renovating existing. And all of that involves Homes England and the Regulator of Social Housing as well. So I'd like to think we've got a fair overview of what's happening in the affordable housing sector. So really lovely to join you. Thanks.
Excellent. Thanks, Sean. Okay, Jonathan, would you like to introduce yourself?
Sure, yeah, no, I'm Jonathan Waters. I'm the Deputy Chief Exec at the Regulator of Social Housing. I've been at the Regulator for 20 years, so through various incarnations, but before that I was at EY as an auditor and housing consultancy, so a bit of experience a few years ago.
Excellent. Okay, good. Well, so I'll take the floor kind of over to Jonathan as well. So thank you for everyone for attending. As I said, to everyone who's just joining, and the numbers are going up as I see, you know, this is meant to be interactive, you know, a bit of a Q&A session to Jonathan and us and who are on the panel. So if you would like to pose a question, have a think about the questions you would like to, and you can kind of write it on the chat at the bottom of the screen, hopefully, and we'll look at that, and if it's relevant, and we will pose the question to the panelists. So it's 5 minutes past 10. Let's move the floor to Jonathan and listen to what he has to say, what's happening in the sector, and his view on the past events and what is happening going forward. Jonathan.
Thanks very much, Andrew, and thanks everyone for attending. And really, please, lots of questions, because the last thing you want is me talking at you for an hour. That would be too depressing. So what I'll do is I'll structure this talk in sort of 4 sections: economic, background, kind of political thing, what we're hearing and seeing from interactions with politicians, some of the operational challenges we're seeing that providers are grappling with at the moment, and then I'll finish off with kind of where regulation is going in amidst all that and what it might mean in the context of those challenges. So if we start off at the top with what's going on in the economy and how that's playing out in provider business plans, the way we're characterizing this, I think, is probably for the last 10, 12 years since the financial crisis, the kind of tailwinds in the economy have been really supporting the provision of social housing. It may not always have felt like it, but you've had an operating environment with low interest rates, low inflation, a strong housing market, and a plentiful supply of labour. And I think that has meant actually that running associations, local authorities, is never easy, but it's probably been as easy as it's ever going to be in the last 10 years. I'm afraid the really bad news is, I mean, and I'm a pessimist, so you've got to aim off for that. But the next 10 years look like they're going to be pretty tough, and certainly the next couple of years, I think most of the economic winds are going to be headwinds, not tailwinds, and we're right in the midst of the storm, if I can overextend my metaphor. So obviously, we've seen inflation affecting the entire economy, and there are various drivers for that I won't go into, but it's played out, I think, differentially within housing association business plans, and very definitely we are seeing, I'm sure you're seeing, cost inflation significantly higher than headline CPI, and certain cost lines are significantly above that. So there's a real differential inflation impact here. Even if rents had been allowed to rise at CPI +1, I still think associations would have been suffering from that not being as high as some of their key cost lines within the business plan. But with inflation, with rents capped at 7%, which, let's not forget, is much better than it might have been. But it could have been worse, but 7% is still a significant real terms income cut for organisations, both to CPI and to their own cost base. And that means there are some very significant stresses, I think, playing out in provider business plans, and in that balance between new supply and existing stock and existing services to tenants. And what's really interesting, I think, is that when we had the sort of 4-year period of rent cuts, actually, the overall cut in income, the real cut in income, wasn't that unadjacent over 4 years to what we've experienced in the last 2 years. Because actually inflation was so much more subdued in that period, whereas the last year's rent CPI +1 was based on quite an old figure by the time you got to the 21-22 year. So actually, even in that year, there was probably a real terms cut. This year, we're gonna have that repeated again. So it's quite a significant amount of income that's come out of the business plan. What's interesting, comparing what providers did or seem to be doing or telling us they're doing between the 4-year rent cut and what's happening now. In the 4-year rent cut, new supply was very much protected. People carried on trying to build as many homes as they could, which was very much responding to political mood music. But they pulled back on and reprofiled quite a lot of their major repairs, a lot of their routine expenditure. They either cut back on it or they pushed it further to the right where they could. But they protected margins and they protected new supply. What seems to be happening this time is that margins are the thing that is taking the hit. So people are still trying to build new homes, and actually it's really hard just to switch off the development of new homes. The pipeline, as you will know better than I do, it's a year or 2 years in advance. So it's very hard just to pull the plug on existing schemes that won't have a cash flow impact for a couple of years. And given all of the focus has been on damp and mold and on building safety and on zero carbon, people are not feeling as able to pull back on the major repairs expenditure lines that perhaps they did sort of 2015 to 2020. That means the thing that's taken the hit is margins, and we're seeing that both in credit ratings for the sector, which are on a downward trajectory, and in the ratings that the regulator's given out for viability. You will have seen that we now have probably between a half and 2/3 of the sector we're now saying is at V2 for viability, and it used to be at V1. If you look at ratings agencies in 2015, most of the sector was AA. Now the sector is spread somewhere between the top of BBB and the bottom of A. I mean, that's quite a drop in credit worthiness. That's still investment grade. It's still a really strong place to be. It's still a place that can find money very easily in the markets. But that money is both more expensive, and it means there is less capacity now to absorb further shocks. So I think if you're on the board or you're in the management team of a housing association, this is really tough times, and it's going to be a tough few years to come as you try and navigate the demands that are being made on the business, both in terms of new supply, and we have got a housing crisis. we have never, I think in the 20 years I've been involved, we've never hit 300,000 homes a year. And that is showing up in all sorts of places across the economy. A lack of new homes is really hampering the country. So that remains a big issue. But the quality of social housing stock, and I'll come on, we'll move on to sort of the political angle here. The quality of social housing stock is now the most important issue that politicians are raising with us. So for most of my career at the regulator, whenever I've engaged with ministers or with opposition politicians or in front of a select committee, the question has always been, why aren't we building more homes? What can housing associations do to build more homes? Can they be more efficient? Are they wasting their money on gold plating services and tenants? Those are the questions I've had for 15 to 20 years. Where we are now, though, is why aren't associations spending enough on their stock? Why are there problems with damp and mold? Why are we seeing the things we're seeing on social media and on the ITV news? So the focus has really shifted 180 degrees from us being asked questions about why the sector can't build more homes, and no one is asking us politically at the moment why aren't people building more homes. They're asking us, why are we seeing what we're seeing in social media? Why are we seeing what we're seeing on the news? And that's a really interesting development. I don't know how long lasting it will be. It's clearly been driven by particular tragic events. So the Grenfell fire being the thing that really sort of began to shift the debate, and then obviously the terrible tragic events in Rochdale with M.R.I.C.S have really shifted that political narrative. So that the question is, why is there damp and mold? Why is there why is there poor quality social housing? Now, we're in the realms of the political here, so hard facts aren't always the thing that's guiding the debate, if I can put it like that. So you'll have seen that we've recently put out our survey on damp and mold, and thank you to everyone that responded to that. But that confirmed the picture that I think we've seen from the English Housing Survey, from other data sources, which is there are issues with damp and mold in social housing. No one's going to deny that there are, and in some cases they are really bad, and in some cases tenants are living in conditions they really shouldn't be living in, and landlords have got to up their game. So there's no denying that.
Jonathan, on that point, we have a question from Anna Robson, which is valid actually. You said we kind of submitted all these questions relating to damp and mold, but when would the regulator share the information back to housing associations?
Well, so hopefully you've seen the report that we've put out. So we've already issued a report explaining what's there. If you haven't seen that, it's available on our website. It's a relatively short but a good read, I think. Those are our initial findings. What we're doing now is following up. So some of the returns we got showed good quality information and a good performance on damp and mold. Some showed good quality information but a poor performance on damp and mold. Some showed poor quality information and no real picture on damp and mold. And clearly we're now following up with those organisations who either said, look, we have got a real, we know our stock well and we know we've got a problem, and those organisations who basically couldn't really tell us properly how well they understood the damp and mold in their stock. And so there's further regulatory work ongoing with those organisations. One of the things we have been doing is we've been encouraging landlords to publish whatever they sent to us, and a lot of landlords have done this. We've been encouraging landlords to put that on their website so that they can share that information with their tenants and with other landlords, and a number have already been doing that. But we will come out with a further report, probably March or April time.
Okay, thank you.
So as I say, we're in the realm of the political. The damp and mold and stock quality in the sector is not where it should be. It is still in a better place than it is in the private rented sector.
Absolutely.
Still largely better than it is in the owner occupied sector. So there's always a case of kind of trying to balance off. There are people that want to say all social housing is terrible, and I just do not believe that. We do not have the evidence for that. There are some examples of poor quality social housing, undoubtedly true, often compounded by other issues like over-occupation, multi-tenure blocks, complex regeneration schemes. I mean, you will all know this better than I do. Some of this stuff isn't easy, but some of that doesn't excuse the poor service failures we've seen from some landlords as well. So it's trying to strike that balance. What we as a regulator are particularly interested in, though, is what is the quality of that stock information? And what we have found and what we've been flagging for a number of years is we do not think landlords understand their stock as well as they should do. And similarly, actually, probably not really for this webinar, but we also think landlords don't understand who their tenants are as well as they should do, including sort of the diverse needs, the diverse characteristics of their tenants, that then doesn't allow them to flex the services they're delivering to their tenants, so they don't really understand it. So we think there is a real gap here that the sector needs to think about how it responds to, about understanding its stock quality much better. And I think damp and mold is in the political spotlight at the moment, but I think damp and mold is a subset of a wider issue, which is how well providers understand their stock and how well they communicate with their tenants about the issues that they've got. And there is a real tendency, which I completely get, but there's a real tendency for social landlords, I think, to want to present everything in the best possible light and to be really nervous about admitting when things are wrong in advance of there being some kind of outrage on social media or in the news. And I think it's hard, I really get it's hard, but it would be better if landlords were owning up to where they had problems earlier, I think, and talking to their tenants and talking to the local authorities and their MPs about where there are issues. Because what you often find with social landlords is they want to tell everyone everything's okay and they want to keep everybody happy. And given the kind of environment I was painting right at the start about the economic challenges and the political challenges, I think housing associations are going to have to make some really difficult choices about where they're going to spend their resources. Is it in their existing stock? Is it in the desperately needed new supply? Is it in the services to tenants? And some of that, I think it's owning up to some really hard choices that landlords are going to have to make. Because I think if we pull back on supply, that's going to be a complete tragedy. I mean, it's just more.
We can't do that. Yeah, we can't lose the development guide and bring in new properties. And is it they take the easy route because it's greenfield or not looking at the existing stock to develop the regeneration. Regeneration is hard. It takes a long time.
It's hard, it's expensive, it's politically controversial, yes. Absolutely all of those things, but it's absolutely essential as well.
Bring in Sean here. Sean, any comments here? I was going to say you got your hand up. Good.
Yeah, no, and I'm also reading the comments in the chat, so thanks for that, Andrew, and thanks for that very frank and open overview, Jonathan, of how you see it. I mean, I think from our point of view, we're kind of at the sharp end of the development side of this whole debate. I'd almost try to contextualize it slightly, that people, registered providers have been encouraged so comprehensively to get involved in new development that many of them, as we all know, have now established funding routes that only support new development. People have placed bonds and finance and other mechanisms in order to support their development ambitions. So that money that's now secured and needs to be invested is another barrier as to why, not that they should anyway, but why turning off the tap of new development just simply isn't an option for many of them, because that's not how they're financially structured. I think the question you so eloquently put, Jonathan, for the self-funding registered providers is we've got a limited amount of cash, and where do we spend it in all of these competing interests? I think the inflationary matter is a real interesting one, in that many registered providers have entered the sales world in some form over the last half decade, perhaps a decade or more. But what's insulated many has been the steeply rising property values. So whilst we've suffered cost inflation, we've benefited from property value inflation. And we're not seeing that quite as starkly anymore. We're still seeing a cost inflation, but we're not still seeing a steeply rising property inflation. And I think the further those two separate, that adds additional pressure. And I think the last comment I would just put out there, Andrew, is that Jonathan's rightly noted that much of the housing stock, from my experience, much of the housing stock that falls into the categories of disrepair and damp and mold and things of that nature is the very stock that registered providers are keen to regenerate and are keen to do something with, and yet the current funding package only supports delivery of new stock and doesn't fundamentally support a more regenerative approach. So I'll hand it back to you, Andrew, but yeah, just some initial observations.
Okay, thank you. Jonathan.
Sure, so I'll try and finish up. I'm sure the debate will be the best bit, but I just want to say a little bit about where regulation's going in this in this context, if that's okay. So I mean, we will, as you probably all know, become proactive across all of our regulatory standards. So again, without wanting to be too techie, you know, we're currently very much looking at governance and viability of housing associations, and on the kind of quality of the services they're delivering, we have a very reactive role. But legislation is almost through Parliament, is going to change that. And so from the 1st of April 24, we're going to be very proactively looking at both the quality of the services and the quality of the stock, as well as the quality of the finances and the quality of the government. So I think what we're trying to do is think about how will that work on the ground. And I think stock quality is a really good issue for us here, because I think it touches on all parts of the way we're going to regulate in the future. You know, one of the things that matters most to tenants is what is the quality of the house they're in. And that's really the fundamental question most tenants have: is my house flat in good condition? Will my landlord come around and repair it if something goes wrong? And so that speaks a lot to both the quality of the stock, but also the quality of the services that landlords delivering. There's really a key question for landlords about: can we afford to maintain our stock? Can we afford to deliver a repair service of the quality that tenants expect? There's some really difficult finance and governance questions in there. And I think as we move to being a proactive regulator, that's really where a lot of our focus will be. What we never want to lose, and it's, you know, really relevant to this session, is one of our fundamental objectives is about new supply. And so we want to keep talking about both existing tenants, and it's really important they live in good quality homes, but also about future tenants, because, you know, there are over 1 million people on the waiting list up and down the country. We need new homes, and a lot of the problems that we're seeing actually played out on social media and the media come from overcrowding. They come from the fact that the stock is partly knackered, so it needs to be regenerated, but it's often knackered and overcrowded, and that can lead to a lot of the issues that we're then grappling with. So I think the only real answer to this is about building new homes, but also about doing the most you can to maintain properties. And I think there is an interesting discussion that Sean just touched on about how government supports and looks on regeneration, which has been a dirty word in government circles for a number of years. I have to say, I think Michael Gove is in a different space to that. I think Michael Gove is very interested in regeneration, and, you know, one of the benefits, one of the upsides from levelling up, is government now willing to talk about quality of housing stock, you know, around the country. And that's not just a northern thing; it's parts of London, it's parts of urban areas around the country. But I think that's one of the things we'll be looking at is how well are landlords thinking about their stock in that really holistic way. So, Andrew, I'm going to stop there because I've spoken for, I think, for 15-20 minutes as advertised, but really happy to open up the debate and discussion.
Excellent. Okay, John, let's go to yourself and ask a follow-up question before we take a.
Yeah, it's been really interesting to hear you speak, Jonathan, and obviously alert to the political agenda. So you mentioned things appearing on social media, tragic stories on the news, etc., informing politicians. It's a little bit sad to hear that's what motivates them, rather than the year-on-year lack of supply of affordable housing for the nation, as it were, because every year there is a lack of supply. It's compounding in the following years. So I've probably not experienced a year in which supply has met demand. And I've been working in the sector for 30 years. So it is the basic bedrock of somebody's life to have a stable, safe, secure home. We're not building enough of them. And in my career progression, I've seen the small housing associations merge into larger development-focused regional development housing associations. The lack of focus on the community delivery and supported housing, and they've become medium-sized development companies in themselves. We've then got the further diversity of the sector with for-profit providers coming in, and we've got the local authorities who are the originators, really, of a lot of the housing stock. And the skill set has moved away from the local authority through the housing associations almost towards the for-profit providers. And the only way I can see significant delivery happening is through the combination of local authority resource and asset and historic asset that they have with housing associations, with some for-profit activity. So almost in a way, a joint venture regeneration. And I'm sure that will bring challenges to the regulator in regulating any joint venture activity. But I'm rambling, but I'm basically saying we need more delivery of affordable homes. And yes, it is the energy costs, it's the freezing of LHA since March 2020, that tenants have to make choice between heating or eating. And in some instances that exacerbates the mold scenarios, the safety, you've pointed to the overcrowding being a signal that a lack of supply. So I'm kind of probably getting things off my chest, but I recognise it's a very difficult.
That's fine, John. That's what we're here for. That's good.
Yeah, I recognise it's a very difficult role you have, being the centre point, being the point at which politicians will come and talk to you. But really, I think there is a housing crisis, and I'm not seeing it in the next election cycle. I'm not hearing it strongly from the politicians. I'm not seeing it as the number1 issue. And if there were investment in that, then it will bring investment to a lot of other areas.
Can I ask a question here, John? And then, so we've allowed, obviously, you know, for-profit providers into the sector, deregulation, and to hopefully to increase supply. Well, local authorities are now kind of doing development and wrapping up, you know, their development plans, but we're still under delivering. So what is the bigger picture? How can we increase supply if there's local authorities now doing development, there's for-profit providers doing development, and RPs and housing associations? So why haven't the numbers gone up? Or are we just spreading it across the different organisations we have?
I mean, my take on this is always, it's not about finance, it's not about the money. The money is there. So it's about the economics. So it's about the government funding. If you're talking about delivering affordable homes, I think the grant rates are very low. That makes living a unit of social rent is economically illogical. You do not make your money back on it unless you find some subsidy from elsewhere, whether that's government grant, whether that's cross subsidy from elsewhere in the business. So it's making the economics work. The financing is fine. There are plenty of people that want to put money into social housing in England. But if you want to get the economics right, so the unit ultimately pays for itself, you need some subsidy from somewhere. Obviously, post 2010 grant rates have been significantly lower. The answer for the last 10 years has been to build some homes, sell them, and reinvest. Very crudely speaking, there's been other things going on. But in a world where the housing market is moving sideways at best and possibly down, that becomes more difficult unless you do something on planning or capturing value uplift and redeploying it into social housing. And all of those things are, as we've seen, politically really contentious, which is why it's easier to complain politically, to say landlords are doing a terrible job, than it is to say, actually, there's some really difficult choices we as a nation have to make about where we want to prioritise where planning and where we build new homes and things like that.
Sean?
Yeah, no, absolutely. I mean, in many ways, I couldn't agree more. I think John has touched on one of the fundamental issues, which is just skills and experience. We used to have a whole workforce that was focused on delivering homes of a particular nature in their geographic location. After 2010, despite the drop in grant rates, the encouragement from government was very clear. All registered providers became expectant that they would deliver new homes. And in simplistic terms, my analogy is that there are 10 jobs needed doing at all times, and there's only 7 people with the skills and knowledge to do it. And therefore, we've created this vortex where staff move around and skilled people change consistently. but we just don't fundamentally have enough. So whilst I welcome other partners coming to the table, as it were, in order to deliver new homes, such as for profits and such as the local authorities, I do rather question who are the people who are delivering these new developments for local authorities, because many of the local authorities let those staff go as part of the stock transfer exercise, or indeed because, in our experience, certainly in the north, you saw an emergence about 5 years ago, maybe slightly more, where regional contractors just got fed up competing in a tender situation to win 1 in every 3 jobs or whatever they were winning. And what they sought to do was take control of the situation by enticing skilled staff to join the contractor side of the equation. The contractor then went and found land. The contractor secured planning and then sold that opportunity back to the registered provider sector, which has solved a problem or fixed a problem for a short period of time. But all the time we've been draining the skill set from the registered provider and the local authority housing sector. So yes, we've opened the doors to more partners, but not necessarily with a workforce that's going to be able to deliver at the scale we need to deliver in order to meet the demand. So I do think we've got a perfect storm. I mean, I know I introduced it and Jonathan has kind of underlined it, but I do think that the shift in property value inflation, so value inflation, is going to be a fundamental issue, because the cross-subsidization levels that we see are incredible. We've already got people agreeing paybacks of 40, 45, 50 years and introducing cross-subsidy in order to make, as Jonathan highlights, a social housing unit work, because that happens to be the political desire of the day. But how you do that on a major scale at a time when you may not be generating that cross-subsidy from your own trading activity is going to be extremely difficult going forward, I think.
Yeah, and I think we've found, John, that through our clients that we work with is data, information about benchmarking coming back into report what is actually going on with their schemes and across the kind of community is really important. So an uptake in kind of viewing other people's data and assumptions and really getting that kind of highlight reviewed. So are we in a going back into a time of kind of more regulation, and how will that affect the sector and the for-profit providers, if I can say it?
So I mean, what we're definitely seeing is there will be significantly more regulation of, actually, let's be clear, the standards that apply for the quality of the services you're delivering and the quality of your stock, I mean, they will change a little bit, but they're going to be at the same kind of level. It's not the level of regulation that's increasing, but what will definitely be increasing is the proactivity with which we're checking that the standards are being met. So the standards, they'll move around a little bit, they'll evolve, but the standards will, I think, stay in the same sort of place. But the regulator is as it has done for the last 10 or 15 years, checking on the governance and the viability of organisations, is now going to be much more interested in proactively looking at, are you delivering good services on the ground? Are you delivering good quality stock? Are you engaging with and listening to your tenants? And those types of issues. I think from the 1st of April, our proactive inspection regime will be looking at those questions and challenging landlords, both in the local authority sector, the for-profit sector, and the HA sector. Across all types of social landlord, we're going to be asking those quite tough questions. I suspect what will happen as a result of there being that greater regulatory and political focus is there will be a shift in the boardrooms to people asking more questions about, well, what's going on with our existing stock, what's going on with our existing services to tenants. And there is, I think, a danger. So there's a danger, I think, that people then move from talking about supply. And one of the criticisms of the sector, fairly or unfairly, for the past 10 years has been it's been too focused on supply and not enough on the existing stock. The danger if this goes wrong is that everyone's talking about the existing stock and nobody's talking about supply. And what you want is that healthy tension and dialogue, because there are trade-offs.
Yeah.
So what I would hope is that we get that balance right, that we're challenging and saying, yes, you should be delivering a good service. I think John talked about safe and secure home being a bedrock of people's lives. That's absolutely crucial. If you can't deliver that, you kind of lose your right, in my view, to be a social landlord. That's the core part of the job. But also we need more and more new homes, and so we've got to get that balance right, and boardrooms have got to get that balance right.
John.
Yeah. So what you've been talking about, more sort of measures or more regulation. Well, I suppose an improved level of regulation. You're introducing the tenant satisfaction measures in April of this year, which is basically how satisfied are our residents with their landlord and holding them to account. So we got those, and everybody loves an abbreviation in the sector. So we've got TSM coming in, haven't we? Yeah. Will informing the regulator of landlord performance potentially influence the allocation of grant? Will there be a connection between the TSMs and Homes England allocation to providers?
I mean, clearly that's the question for Homes England rather than us. The thing for us is are you meeting the standards that we've set? The tenant satisfaction measures, which are actually a mix of both qualitative and quantitative measures. So some of it's hard edge management information, how long it takes to do a repair, etc., deal with a complaint, etc. And some of it is, as you say, is perception measures. How do tenants feel about their landlord and the repair service? For us, those are tools that will be almost as much use for tenants looking at their landlord as they will be for the regulator. They will be helpful, but there is not a target level for any TSM that says you have to be at 60% or 70% or whatever. What matters for us is the TSMs will inform us in our inspection work and in our engagement with providers, and they provide useful context, but they're very much in the world of can openers rather than benchmarks. And so we will come out with judgments on the standards. And the thing for us is, has the landlord met the standard? Have they delivered it? TSMs will tell you some of that, but lots of other things will go into that judgment as well. So it'll be a combined judgment. What Homes England or the GLA do on the back of our judgments, I think, is an interesting question, not least because of, obviously, you'll have all seen what Michael Gove did to Rochdale Borough-wide homes in the light of the coroner's report and pulled grants from them. Now, that is a question that's way above my pay grade as to whether politicians in Homes England are going to want to do that on the back of our judgments.
Absolutely. Sure.
I promised Jonathan that I wasn't going to raise this today, but seeing as Bob's put it in the chat, I thought, oh well, I will raise it anyway.
I was gonna. It was coming. It was coming.
Yeah, it was coming, and I need to declare I've got a dog in this fight. So
let's see what Bob. Let's try and read out what Bob said there. So Bob Green says, Jonathan paints a bleak picture. I think it's kind of where we are at the moment. Actually, we are a small community group seeking to become a registered provider. Could we have picked a worse time to apply? Question mark. Any tips to ensure we can weather the storm? And I'm saying let's go to Sean first, right?
So just to amplify Bob's valid point, I mean, I think you've got an absolutely invidious position, Jonathan, because you're trying to entice new people to deliver new homes for all the reasons, all the really good reasons we've just advocated, and at the same time you're being looked at as the people that are going to keep people safe, comfortable, warm in their homes and act as the regulatory role. So let me declare up front, I don't envy your position in the slightest. But I can share with you, and on behalf of Bob, that there is, it feels, a disproportionate or an in-proportionate level of becoming registered in order to deliver new homes. It's particularly relevant to me because I act on nationally for all the almshouses, whereby they simply cannot develop new homes without the support of Homes England. It's literally that fundamental. There is no cross subsidy. There's no other money coming from anywhere else. It has to come from Homes England. But Homes England's criteria is they must be a registered provider. And we've got extreme examples of one in the Midlands who are looking to build one home to add to their 14 homes that they've managed for 100 years. They want to add one home and they're having to go through regulation. And equally, if somebody wanted to deliver 50 homes, they'd need to go through regulation. Bob, who I don't know, but Bob has put in the chat helpfully that their community group is needing to go through regulation. It just seems I'm very aware that this is rowing against the tide, because asking for less regulation now doesn't seem to be on message. But I do ask, what my clients tell me is being regulated is not a problem, and in many ways is really comforting. It gives them the structure to operate their almshouse or their community group by. So that's not the issue. But it is the length of the regulation process that many people, and I'm only being very open with you here, Jonathan, it's that people then turn away and say, do you know, I'm not going to go through that. It's just too high.
Yeah. It's a really interesting point. I mean, the first thing I would say is being regulated is not fun. So, you know, literally anyone that comes to ask me, you know, should I get regulated? Or they think really hard about whether you want to be regulated, because being regulated is not fun, it's not easy, and it's not meant to be. So, you know, I think Bob talked about a bleak pitch. I am the Eeyore of the regulator, and the regulator is populated with Eeyores. So, you know,
we wouldn't say that. No, we wouldn't say that.
True. So I put that on one side. Getting over the line for registration is hard, I don't deny that. But the problem is, all we're saying is, to be registered, you have to demonstrate that you will be compliant with the standards once you register, because we can't have people registering who can then not meet the standards. So, you know, there are tools that we would love to have that legally we're not allowed to have. So we'd love to be able to issue a conditional registration that says come on, and then have 6 months or a year to do X or Y to sort things out. And we would love to do that. And you know, we're having legislation going through Parliament at the moment, and we tried to get something in there that would change that, and it proved technically just too difficult. So it is difficult. I mean, I would encourage people to come and talk to us. I think you're absolutely right. For a 1 unit additional the grant to build 1 additional unit, being registered and going through that registration process will be disproportionate. There's not really a lot I can do about it, because once you're in. And what we have seen, one of the reasons we worry so much about registration, is we've seen organisations that register on one basis and then actually go off and do all sorts of other things. Now, I'm sure that's not the case with your client. I'm sure it's not the case with Bob, but we have seen what one might call nefarious registrations. We've also seen small landlords, small not-for-profit landlords being effectively sold. I mean, I've been told on a few occasions there is a market in used not-for-profit landlords where the board will effectively be brought off and a new board appointed. So we have to be really careful, because there is a real value to having the RP badge. You know, if you want to work with local authorities, you want to work with Homes England, the GLA, having the RP badge is really important, and therefore it has to mean something, and we can't just let people in. But I agree, and if we want to have a conversation offline, Sean, and I'm really happy to do that. If it's the kind of sort of franker discussion we need to have, then yeah, really happy to have that.
Yeah, smashing. Thanks for that, Jonathan. Yeah.
Sean, can't these alms homes group together and have a national kind of registration, and then they can do it under one banner?
Well, I mean, I know this isn't an almshouse course, so apologies, Andrew, because I'm not trying to steer it down that line, but they're already regulated by the Charity Commission, who dictate almost everything that they can do. You know, many of these still have original charitable intention and schemes dating back hundreds of years. And if we think regulation is difficult, then dealing with the Charity Commission getting the intentions of a benefactor from 300 years ago changed is even more challenging. So we have this kind of Bermuda Triangle of the regulator, Homes England / GLA, and the Charity Commission, and all three organisations want their own outcomes, and I completely understand it, but there are points at which those outcomes clash into each other and isn't particularly helpful. I think the only point I would make, and I will take you up on your kind offer, Jonathan, but the only point I would make is where we've got housing providers with a strong historic track record of provision of housing, maybe that's the area where there could be, I don't want to come up with some old government slogan, but there could be a lighter touch approach than the fact that it feels like Bob and his community group are going through exactly the same process as one of the national pension funds who have decided we're going to invest in affordable housing. So that's the disproportionality, I guess.
I can promise you we're giving the pensions fund a far harder time.
Let's say that. Right. Okay. John, let's change another question from yourself.
I'm saying that the regulator looks at the pension funds a little bit, more keenly. There's a very interesting story in Inside Housing about the significant for-profit provider of shared ownership having G3 and V3 determinations on it currently. So there is evidence of the regulator, yes, regulating effectively out there. I just wondered, what's the regulator view when you actually see stories about significant surpluses for organisations, and what are your thoughts when you see those declarations of millions as annual surpluses for key affordable housing providers? And
I mean, people get very interested in the surplus figure. I mean, I always want to put it in some kind of context. So you look at how much they will have spent that year on major repairs, and it will largely be much larger, and particularly put the capitalized major repairs back in. So there are some organizations that make significant amounts of money, but in the not-for-profit sector, that is locked in within the sector. It's going to be reinvested. What you don't see actually largely is housing associations sitting on large cash balances. What you do see is that money being reinvested back into the stock, whether that's new supply or whether that's homes. So, I mean, you're right. We have expectations around value for money, and we expect people to run their organizations efficiently and invest the surpluses back into the stock. And that, I think, broadly is what we see as happening. I mean, there's a really interesting debate about, which I don't have a dog in this fight, to borrow Sean's phrase, but what is the right size of housing associations? Should they be more locally focused and perhaps maybe have weaker margins because they're very close to their communities, or should they be larger, bigger national organizations that have got the balance sheets to take on the kind of commercial risk needed to deliver homes at scale? And there are people who've got all sorts of views about that discussion. I mean, I would say that we are seeing margins come down significantly. So if you look at the kind of margin or the interest cover ratios for the sector, they went up quite a lot over the last 10 years. The last 2 or 3 years, they've started coming back down as people have started putting more spend on the existing stock. And we are now seeing interest cover ratios that are trending quite low, which is, again, one of the reasons why we and the rating agencies are saying, actually, these organizations are now in a weaker financial position than they were. My bigger worry at the moment is not the size of the services. It's about can big organizations trade through what's going to be a difficult period. I mean, we've seen that Swan got itself into trouble and Sanctuary sorted it out for us. And there are other people who are currently on our V3 grading under review list who will probably need to go and find an alternative home for themselves. So I think we are going to have a period actually where some housing associations, there are going to be more mergers because of the operating environment. People are going to need to merge. Actually, my worry, John, and this get back to my EOR characterization, my worry actually is what we're going to get now is more organizations not able to manage the financial risk they're taking on.
Okay. I did have one fun question that I wanted to put to you.
Is this your last question? Is this your last question on the
Okay, yeah.
I like it.
If you were to change jobs overnight and be a chief executive of a housing association, what would be your immediate strategic objectives?
To get back to being the regulator, which is too hard.
Regulation is easy.
I mean, genuinely, I think if you're on the board or the senior leadership team of the HA, you've got some really difficult. The strategic question for me is getting that balance between new homes and existing stock, and understanding how you're navigating that is for me the biggest call any chief exec or board have got to make at the moment.
Thank you.
Excellent. Okay. Well, we've still got 10 minutes out there, or 5 minutes for anyone else who wants to pose a quick question to Jonathan or the panel. Sean, any other question you would like to ask Jonathan?
I was just reading the anonymous question. Sorry. How does the regulator see supported exempt accommodation subsector? And is there a reason why they have not provided any guidance to providers on this area, given the political and media scrutiny?
This is a lovely question. So there are two types of accommodation that have been, the provision of which has been problematic in the last 5 to 10 years. So one is short-term exempt accommodation, predominantly in Birmingham, and people will be aware there's a number of organisations where we've had concerns about how they've operated. A couple have closed down and exited the sector. Others are we're still heavily engaged with, as are the local city council. There's also specialised supported housing, which is being provided, again, as people will know, through some real estate investment trusts who are listed and some private equity houses who are leasing those properties on to what were quite small housing associations. Those organisations, by and large, in our view, and we put this in all of our judgments, they have often grown quite quickly, and the governance and the probity hasn't kept up with the speed of growth that they've taken on. They're financially very thinly capitalised. They don't have significant amounts of reserves, but they have managed to sign up to some very significant lease liabilities. Some of them have been very poorly governed. There have been conflicts of interest about how they've grown. I mean, there's a whole litany of tale of woe which we've recounted in our judgments and in some of our other publications. So I completely refute the suggestion that we have not given the guidance. What we are not, though, here to do is to run businesses for them. It's for the board to run those businesses. We've pointed out what the issues are, and we've been to court. We were taken to court by inclusion about our judgment, and the court fully backed us. We got rid of Larch Housing Association after 4 or 5 years. We deregistered it because it simply refused to do the things that we said it needed to do. That has been deregistered. They appealed to the court. The court again upheld our decision to deregister. I think some of these organisations need to take a really hard look at themselves about what they're doing, what they're trying to provide, and who is benefiting from some of their activities. Because often it's not necessarily the residents; it's often counterparties, other connected parties. So I'm it might not sound like I'm being really careful about what I say because I have some really strong views here, and I think there is some really poor practice that needs to be driven out of the sector. It has no place in social housing.
Good. I think we all agree with that and concur with those thoughts. Any further follow-up question from that?
Well, exempt accommodation is kind of the sort of ghost in the room, really, or the elephant in the room, isn't it, really? It's something that increasingly providers are having to fall back on, and it's about a negotiated position with the local benefit office. So it's also about the direction of the mainstream away from the supported housing agenda. So it's often left in the hands of the few that understand that arena. And some of them are very good and some of them are opportunist. And it's, you saying you wouldn't want to be in the HA sector. I wouldn't want to be in the regulatory sector in terms of looking at that. So anyway.
Okay, we've got a question coming in here on potential mergers due to financial pressures. How do you see the balance of consumer standards, which are generally considered worse for bigger the RP becomes? I suppose that's gone back to the TCMs coming in.
Yeah, I mean, this is a really interesting debate on which there are a wide range of views about if you're a bigger landlord, are your services inherently worse?
Yeah.
I mean, I would say I've seen plenty of rubbish small landlords. So there is definitely not a direct equation. If you're small, you're good. And actually, most of our regulatory interventions are with landlords in the sort of 1,000, 2,000, 3,000 home space. Those seem to be the ones that we find struggle most, actually. So I don't necessarily agree. On the other hand, I think clearly big organisations, it is more of a challenge. You are further away from your customers, and I again, this is more of a personal musing. I suspect what we're going to see is a split between landlords that decide that they want to stay focused in a geographic area, or as John was just saying, maybe focusing on supported housing, but they'll be very focused in what their mission is, whether that's about locality or whether that's about a type of customer. And then we will see much larger, bigger organisations. I think we're going to see increasingly a bifurcation of the sector, with people deciding to stay small, let's say below 10,000 homes, and that's where they're going to be, and they're going to be focused in, let's say, in a particular geography. And other organizations who are going to become large regional or national players.
And their customers are going to be more vocal because social media is coming from those people coming through older are going to demand more, and it's going to be more vocal. So they have to be more agile to their product and its their customers and their clients. Sure.
Yeah, I mean, I'm just conscious of the time, Andrew, and people will be drifting away in the next couple of minutes. But just to say, I mean, I think it's been absolutely fascinating hearing direct from Jonathan about the views of the regulator and moving forward. But I think consistently throughout this, and I'm not normally an Eeyore character, I'm Tigger in this particular pantomime. I guess it's just a plea really that there are choppy waters ahead for registered providers. There's difficult times for the regulator. There's even more challenging times for Homes England and DLUC. And I just think if ever there was a time for those organisations to try and come together and find a way of navigating through the next difficult half decade, whatever it might happen to be, this is our moment, really. I think there have been behaviours, traits and patterns that have grown over the last decade and I think your analogy, Jonathan, was absolutely spot on, because even if we haven't wanted to acknowledge it, we've had very strong tailwinds, and that's enabled you to do some of the more outward thinking things that actually now we're going to have to try and reverse out of or do less of, and maybe just go back to focusing on what we were here to do in the first place. So I guess my plea is that we recognise each other's position and challenges in this, but this is a time to kind of stick together and get through it, as opposed to sort of become entrenched in our own places.
Yeah.
Well said. Okay. Well, let's bring this to a nice close then. So let's thank you guys from SDS for turning up to this webinar and speaking so eloquently. We at SDS love doing these webinars, love hearing from our clients and putting some content together once a month, normally on a Wednesday. So if there's any burning topic that you have and would like to send to me, please do. My email is andrew@s-d-s.co.uk. I'm happy to hear from your suggestions. SDS will be at the finance conference. We have a stand there generally. Please pop over and say hello and give your comments on what things you would like to hear from us. We are here to support you through these difficult times. Obviously, we provide software, but we provide expertise, and we partner with great people like Sean Stafford and Saffer Cooper, and have done for a while. And his training program is an excellent skills trend setter in the north. So we're really happy and glad. Thank you for attending. If you hopefully enjoyed that, please tell your friends. Let's put some other content together and have a good day. Thank you, John. Thank you, Sean. Thank you, Jonathan Walters. And have a good day.
Thanks, Andrew. Thanks, everyone.
Thank you.